Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Lewis, and we're excited to have you join us today. We've got a packed show for you, with several interesting stories that caught our attention in the world of finance. First up, let's take a look at the latest news from the stock market. We've seen some significant movements in recent days, with small-cap stocks like Ratna Wires making headlines. This company has announced a 1ON bonus issue, with a record date set for December 26th. But what does this mean for investors, and is it a good time to get in on the action? Ratna Wires has had an impressive run over the past 2 years, delivering a staggering 136% return. The company's Q2 results showed a profit after tax of Rs 21.8 crore, reflecting a year-on-year growth of 29.9%. Revenue from operations was up 23.8% to Rs 14.4 crore, and EBITDA grew by 53.4 crore. These are certainly impressive numbers, but as always, it's essential to do your own research and consider multiple factors before making any investment decisions. In other news, we've seen some significant activity in the world of bonus shares. Ratna Wires is not the only company to announce a bonus issue recently, and investors are eagerly watching to see how these moves will play out. We'll be keeping a close eye on these developments and bringing you updates as more information becomes available. We're also following the story of Ather Energy, which has raised Rs 420 crore from existing investors. The company plans to use this funding to expand its manufacturing capacity and improve its research and development capabilities. This is an interesting move, given the current state of the EV market in India. Additionally, we're seeing some significant movements in the stock prices of companies like Voltas and Crompton Greaves Consumer Electricals. These companies have been impacted by various factors, including changes in government policies and shifting consumer demand. As always, it's crucial to stay informed about these developments and adjust your investment strategies accordingly. Finally, we want to remind our listeners that the world of finance is constantly evolving. It's essential to stay up to date with the latest news and trends to make informed decisions about your investments. We'll be covering all these stories and more in depth throughout the show, so be sure to tune in for our expert analysis and insights. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're continuing our discussion on the latest developments in the financial world. Today, we're looking at the Indian market and the insights shared by several experts. First, we have Satyam's views on the IT sector, but what caught our attention was the commentary from Ajay Srivastava, CEO of Dimensions Corporate, who emphasized the importance of pedigree and integrity in investing. He noted that hypervaluation in IPOs is a thing of the past, and investors are becoming more sensible. Srivastava also highlighted the strength of India's automotive and healthcare sectors, recommending focus on companies with strong pedigrees. Additionally, we heard from other experts like Satyam and Ajay Srivastava, who shared their thoughts on various market themes. One key takeaway is the emphasis on structural investment themes across sectors, including auto, healthcare, and defense. The experts also warned against the dangers of hypervaluation and stressed the importance of integrity over flashy financial engineering. It's clear that the Indian market is experiencing a shift in investor sentiment, with a greater focus on quality and profitability. As investors navigate this landscape, it's essential to prioritize pedigree, integrity, and sound business models. We'll continue to monitor these developments and provide you with the latest insights and analysis. Welcome back to the Riskwiser Zone. As we wrap up today's show, we're taking a closer look at the rapidly evolving world of cryptocurrency and its impact on traditional markets. Recent news out of Japan has caught our attention, where the Japan Exchange Group is considering measures to limit the growth of listed digital asset treasury companies. This move comes amidst concerns over potential losses connected to the crypto hoarding frenzy that has been sweeping the globe. According to reports, the Tokyo Stock Exchange operator is exploring options such as stricter application of its backdoor listing rules and requiring firms to undergo a fresh audit. The goal here seems to be to ensure that companies are not overly exposed to the volatile cryptocurrency market and to protect investors from potential risks. It's worth noting that, since September, 3 listed Japanese companies have put their plans to start buying cryptocurrencies on hold due to pushback from the Japan Exchange Group. These companies have been informed that their fundraising abilities will be restricted if they pursue buying crypto as a business strategy. This development highlights the ongoing debate about the role of cryptocurrency in traditional financial markets. While some see it as an opportunity for growth and innovation, others are more cautious, citing concerns over volatility and regulatory uncertainty. As investors, it's essential to stay informed and adapt to changing market conditions. The Japan Exchange Group's move to curb crypto hoarding firms may be seen as a step towards mitigating potential risks, but it also raises questions about the future of cryptocurrency in traditional markets. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.